Hi everyone. I hope everybody is doing well. Today we're going to briefly talk about the difference between getting paid through a W-2 and getting paid through a 1099, which basically means an independent contractor. So a lot of times, you might get a new job or a new gig that asks you, whether you want to get paid through a W-2, which basically means you will be under salary and you may be eligible for different types of benefits the company might have, which is, it could be medical benefits, retirement benefits, and they will also give you another option sometimes. In most cases they might not, but in some cases they might give you an option to get paid in 1099, which basically means you will be an independent contractor. So when you're an independent contractor, you don't really have the option to participate in the various benefits the company might provide, only because you are not considered an employee, but rather you're considered a independent worker. Also, unfortunately, if you were to lose the job 6-7 months down the line, if you worked under a W-2, you will be eligible for unemployment. But with 1099 independent worker, you will not be eligible for unemployment. Another thing we should consider is that when you're working as a W-2 salary, you are not able to deduct any business expense because you are considered an employee. On the other hand, when you are an independent contractor, you are now able to deduct various business expense, which could be your travel expense, telephone expense, utilities, or home office expense if you're working from home. So we're going to take a look at a quick example that shows the difference between getting paid in a W-2 and a 1099. So in this scenario, this individual has a salary of $100,000 for the whole year, right? So we'll come back to this in a bit. So when you are working in a W-2, on your pay stub, you will each paycheck, you will see there's certain taxes being taken off, which is Social Security tax, which basically is 6.2% of your salary, and your Medicare tax, which is 1.45% of your salary. Now keep in mind, this is not income tax. This is taxes related to Social Security benefits for individuals that are currently receiving Social Security benefits, and for yourself, when you retire, you will be eligible for Social Security benefits based on this. Then you will be paying federal income tax and state income tax. And if you're living in local cities such as New York City, you will be paying New York City taxes as well. So in this example, this individual has paid a total of $31,000 in taxes on his $100,000 in income. So the only deduction this individual is getting, which is the standard deduction of $12,400, which is standard for being single, assuming the individual does not own a home. Now, let's look at the second scenario where an individual gets paid in 1099. So same scenario, the gross salary was $100,000, but now this individual is able to deduct business expenses, right? So in this case, the business expenses that we do have is travel expense, telephone expense, office supplies, home office expense. Home office expense basically means when you're working from home, you're able to deduct a proportion of your home as business expense, considering that, that part of the home is being used for work purposes. So assuming this individual's income is expenses are $23,000, in this case, the total net income becomes $76,000. On top of that, this individual will also get a QBI deduction, which basically means qualified business income. To keep it short for this example, it's basically 20% of your net income, or 20% of your net income minus standard deduction, whichever is lower. So in this case, it's $11,000. On top of that, this individual is able to deduct a 50% off self-employment tax. So what is this self-employment tax? So this is the biggest difference between W-2 and a 1099. So when you're working with a W-2, like we mentioned before, you're paying Social Security taxes of 6.2% and Medicare taxes of 1.45%. What you don't see is that your employer is matching the same number and paying the same amount of taxes on your W-2 salary. As a result, a lot of times companies feels that, they try to pay in 1099 to save this Social Security and Medicare tax. So when you're getting paid in 1099, you are not paying Social Security and Medicare tax, but instead you're paying self-employment tax, which is almost 14.13%. Just to keep this calculation simple, it's about 14.13%. It's double what you would have paid under a W-2. This is the main difference between a 1099, the self-employment tax and the expenses that you can deduct against the income. So in this scenario, based on this income and taxable income of $46,000, this individual that's getting paid under a 1099 actually ended up paying a total taxes of roughly $22,000, which means this individual saved almost $8,700 in taxes. On top of that, if you get a little bit more strategic, this self-employment tax that you have here, you could actually lower that if you consider an S corp. This is something that we'll discuss on another video, but just to keep this in mind. So this is a very simple, short explanation of getting paid on a W-2 versus 1099. Just keep in mind, both of them has its advantages and its disadvantages. Again, consider this thoroughly. Make sure you understand what a W-2 benefit would have provided versus a 1099, and make the decision based on what will help you the most. For now, we'll end the video here. If you guys have any questions, always feel free to give us a call. Thank you guys. Take care.